Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our Monday buys video for the M1 Finance platform. Now, every Monday I add $115.38 into the M1 Finance Roth IRA. This allows me over a 52-week period to max out my Roth IRA contributions for 2019. So this week we're going to be taking a look at the weekly performance that we performed last week, comparing it to the main indexes. We're also going to go over what stocks I am buying this week, and we're going to start off very quickly taking a look at stock futures and what has the market up over 1% currently. So without further ado, if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I cover the stock market, dividends, real estate, personal finance. I invest in all three. If you do find this video helpful, hit the thumbs up. And if you have any comments to yourself, want to drop a question, want to drop some information, or just say hello, drop it into that comment section. I do read and reply to all your comments, and let's go ahead and get into the video. So I'm going to go ahead and flip my screen around here, and then we're going to go ahead and take a look at stock futures right now, up over 1% here. If I refresh this, I'm not sure if we'll see any sort of difference. Yes, it's still climbing right here. It's still climbing, even though I just brought this page up about 10 minutes ago or so. It's still continuing to climb. Stock futures for the S&P up 1.16%, the NASDAQ up 1.72%, the Dow Jones up 1.06%, and the market right now is at a huge rally because the U.S. and China has came to a trade truce. The U.S. will not be raising any tariffs. I will have this specific article in the comment section below. So as you're after you're done watching this video, you've hit that red button below, subscribe to the channel, you've smashed that thumbs up, scroll down in the comment section. I will have a link to what is currently going on and what are the big questions out there in the market. That covers the U.S. and China trade truce. It goes over the OPEC meeting. It goes over some of the job reports and the overall economy here and what is coming up this week. We'll kind of cover what's coming up right now. Monday, we have the OPEC meeting. We have Wednesday. The U.S. markets are on a half day. So remember, on Wednesday, the 4th of July is on Thursday. Wednesday will be a half day in the markets. Thursday, the markets will be closed, and then Friday, we will resume. So this is a very short week with job reports coming out here on Friday. But I will have this article down in the comment section. Take a look at it after you are done here with the video. Now, let's go ahead and jump into the portfolio now, and we're going to take a look here at the M1 Finance Roth IRA activity for the week here of June 24th through the 30th, I believe. Nope, 24th through the 28th, 2019. Now, overall, our portfolio did get hit here pretty hard this week. I am down 0.64% within this portfolio. Now, the rest of the market, the S&P was down 0.29, so about half of what I lost. The Dow Jones was down 0.45, and the NASDAQ was down 0.32. My portfolio was hit pretty good. Now, a majority of this was due to AVI. AVI still has not recovered. It got slammed, and it just hasn't recovered all the way. I have been buying up AVI. I posted it over on Facebook. I bought up some, maybe 30 shares or so on my Merrill Edge account. I do plan to buy more of a few other positions going into this week. I'll probably be making a short trade, just a small position, and some other positions, as I know this week should be pretty positive. And also companies that hurt the portfolio last week were real estate investment trust, REITs. All of my REITs were pretty much hit. We had Digital Realty Trust down 4.35, WP Carey down 3.95, and Simon Property Group down 2.64, and we have Essex Property Trust, I forgot about that one, down 2.04. So all my REITs were hit 2%. I've seen a lot of investors taking a look at ticker symbol O, but I'm not considering buying into O until it drops below, I believe it's 60 is where I set my buy, or my estimate at for it. Now, the majority of my portfolio was actually red here. You can see a good chunk of it was red, whereas a very smaller half of it was positive. Some of my biggest gainers for the week were Cardinal Health up 6.46, Walgreens up 4.23, and CenturyLink up 3.73. Now, these positions are nowhere near what my other negative positions are. That is why the portfolio took more negative, got hit harder because of these larger positions versus not falling back as much because my portfolio was still not balanced out. If we take a look at the holdings over here, just in value wise, we can see that there's a much different, as we kind of cycle through here, some of my smaller positions here are still not quite to where they should be as far as percentage goes, target percentage goes for these specific positions. So that is sort of the activity. We really don't have anything in cash. I am expecting one dividend, and that is from DLR. So if we go into the M1 Finance portfolio, take a look at the activity. I don't actually have any other activity. I had one company pay out a dividend. That was Main Street Capital. They paid out 98 cents. This was all reinvested back into Las Vegas Sands. Las Vegas Sands being a whole new position in the portfolio. If you haven't seen my video last week that I released covering why I decided to start buying into Las Vegas Sands, I took last week's dividends plus my last week's deposit and specifically targeted to buy Las Vegas Sands because I did a comparison with it against many other resort and casino companies, and I decided this is one of the best valuations out there, and I kind of wanted to continue adding new positions to the portfolio to allow me to kind of average down and have more positions that are actually negative. If I do look at the overall portfolio, I don't actually have, oops, let's go back to the portfolio. I would like more positions to just be able to average down on. A lot of investors will know that if you are constantly adding money into the market every single week, these are my only negative positions. If I took a look at the all, so if I click on all and I go here in my negative, I only have 1, 2, 3, 4, 5, 6, 7 positions that are negative out of all my 33, 34 positions. I would like to start up some new positions. Hopefully I'll have some positions where I can average down on a value, and if they do fall back slightly, that gives me more opportunity in the future in these following weeks or months to continue to buy into them. And one of the positions here that recently opened up and dropped down below 15% where I wanted it to was Avi, and I think I am going to be adding Avi this week, and I'll show you why I will be adding it here as it goes into the activity here, I believe towards the end of the month, but we'll take a look at that. Now, we've covered the 1 week performance, we've covered the activity, which was basically Main Street Capital. I am going to be making a deposit of $115.38. And the one stock that was going to be paying out was Digital Realty, ticker symbol DLR, Digital Realty Trust. Now, this company here should have gone ex-dividend on, it should have paid out dividends here on the 28th of June, but M1 Finance, so here it should have been paid out on the 28th, which was on Friday, but M1 Finance, if you're supposed to get paid out on Friday, it normally gets paid out on Monday. It still counts on the statement on the spreadsheet that you received that dividend on Friday, but it's being held currently, and then it'll just kind of deposit into the account, and then on Monday I will have roughly $3.99 sitting in cash, plus my deposit of $115.38. Now, as far as companies that I want to be buying up this week, the way that I do this is I jump into my current live data. I sort this by what positions are currently negative, and we already saw we have a few positions that are negative, and I go ahead and look that we're in the month of July, the 7th month of the year, so I want to look for companies that are going ex-dividend this month. Now, JP Morgan is one that is currently down slightly in the portfolio. It has been coming up, and I do believe this week is going to be very positive for JP Morgan along with the rest of the market, and I may decide to buy just a little bit more into this one. Now, we have also AT&T. I don't plan on buying AT&T currently. I believe it's trading around $33, $34. My initial unit cost is $34.48, but since my initial buy, I really haven't. I've been trying to average this down because on my initial investment, when I created this portfolio back in 2018, I had auto invest turned on. I put in my money and it went out there and bought every single stock out there that I had in my portfolio, regardless of valuation. And this is just where my unit cost has been when I started buying up this company. I've been trying to decrease it slightly, but with the amount of equity that it would take to lower it below 30, it just hasn't taken place. So I'm not going to be buying up AT&T. I believe that one's at a fair position now, and I'll probably add to it if it does fall below 30 bucks. Another one here is Avi. So here is the one I was discussing. Avi took that 16% plunge. It is down 21 or so percent in the portfolio, and I told myself just a few weeks ago, I made a video that I was holding off on buying Avi because I really wanted to buy Avi anywhere below 15%, and that is where it is at now. So The first company here that is going ex-dividend is actually Chase, JP Morgan, ticker symbol JPM. This one is going ex-dividend on July 3rd. So we have 1 day, 23 hours, and 28 minutes until this one goes ex-dividend. So that is Wednesday. I have to buy this stock here on Monday or Tuesday in order to get that dividend paid out the following day. So if I were to buy this one now, I would get paid out at the very end of July. The other one here is Caterpillar, ticker symbol CAT. This one goes ex-dividend on July 19th. This one has 17 days until it actually goes ex-dividend. Now, I'm not sure what the activity has been for Caterpillar. I'm going to take a quick look. Let's see, take a look at the 1 month. I know Caterpillar has been doing some rebounding lately. So let's see where it was at this last week. So I know the week prior, Caterpillar, I believe, had gained about 3 or 4%. See if I can find it in here. It's still a negative position. Oh, right there. So it is rebounding higher right now. It is a position in the portfolio that is down roughly, where is it? About 7% there in the portfolio. So I may buy a little bit more Caterpillar. It's, let's see, what's the equity? Equity-wise, is at $610 of my own invested capital. It's sitting at about 650, 665 as far as current value. So I may average down on that position. They're offering a 3% starting yield on that one. And Avi, of course, I want to be buying up this one as well, lowering my unit cost on this one. This one doesn't go ex-dividend for another 10 days. So I'm going to go ahead and sort these by time. And then my last one here was Digital Realty Trust. And this one's already gone ex-dividend. It's already paid out. I just wanted to show this one to you guys as far as what dividends getting paid out. So my 3 stocks that I can want to, kind of want to invest in to lower my unit cost are going ex-dividend here in July. So JP Morgan will probably be my only time that I buy right now because it is going ex-dividend on Wednesday. In the following weeks, I won't have the opportunity to lower my unit cost. It's not currently trading at what I would really consider a value. When I was looking at this earlier, it was, let's see, where is it? Let's see, gotta bring this up real quick. So JPM is a company here I was taking a look at. Another one was EV, I believe, Eaton, Vance. So these are the 2 I was taking a look at earlier as far as where they are at for the 1-year valuation. So I was doing a comparison. These are 2 financial companies. Let's go ahead and bring up EV as well in here. This one doesn't actually go ex-dividend for quite a while, I believe. It just went ex-dividend back in... Oh, it's going to go ex-dividend here towards the end of the month. So this would actually be a good time to also take a look at this one as a new financial buying opportunity. This is one that I've been eyeing. And let's go ahead and show you why. So JP Morgan, it is coming up on ex-dividend, but in my portfolio, it's only down slightly down from my initial unit cost. JP Morgan, I am down 0.37%, down $1.80. Yeah, I am getting a starting yield of roughly 2.86, but let's see, what's this one giving me? A 3.25 for Eaton. Now, when I take a look at JP Morgan, again, we're trading not at all-time highs. We can see here back in midpoint 2018, JP Morgan was trading in that $115, $120 range. It has came down a lot since that high down in December. That time frame there, it actually broke below $100. It has recovered now to 111. It's still trading at a high. If you were to point an arrow out here and give it a sort of a medium point of $108, that would be considered, say, fair or semi-value here for the year. And it wouldn't be until you don't really get a 3% starting yield with JP Morgan, but some of the highest yields here that you would have received here lately is around 2.8, and that's just not out of value. And that's why, while I do believe JP Morgan is a good company to hold, it is not one that I'm primarily wanting to throw a whole lot of cash at. Now, the other one that I took a look at recently was Eaton Vance Corp. This is an asset management company, asset management, whereas JP Morgan is more money central banks. You see a JP Morgan or Chase located just about every single city out there that I know has a few, or at least one within a drivable distance. Now, Eaton Vance Corp, it's an asset-based company, but here it is pop it up. So normally you don't buy in the first recovery here. So this one recovered from about 37 to about 40. It dipped back down. It started its second recovery. It's now trading at $43.13. If we bring in the 200-day and the 50-day moving average in here, we can see that it just slightly broke. It got that support from its 200-day moving average, and it is starting to move up higher currently. And I'm going to go ahead and take these away because I think that kind of ruins the effect of the yield. Now, starting yield for this specific position is around 3.25% as we kind of jot down here. This one has 38 years of growing their dividend. They have one more dividend that they're going to be paying out here on July. So they go ex-dividend July 27th. They pay out around August 15th. And the next 3 months, so in October, they're going to be raising their dividend. You can see here they've been raising it from 28 to 31 to 35, and they'll probably continue to raise it. This one has 38 years of growing and paying out dividends. So as all these financial institutions were cutting dividends during the recession of 2008, 2000, and so Eaton Vance had not cut their dividend. This is considered a dividend aristocrat, having grown and paid out dividends for the past 25 years. I also took a look at their financials. So while this one is trading with a starting yield of 3.25, it's on its recovery here. We can see some highs of up in 55.60. So it does have a much better valuation than what JP Morgan. If we do a comparison with its revenue, free cash flow, and net income, over the past 10 years, we can see that Eaton has revenue growing at, say, 9% over the past 10 years on average. Their free cash flow is up 24.9% on average per year, and their net income is up 23.9% on average per year as well. In comparison to JP Morgan, we can see their revenue and net income are very good. You know, free cash flow for financials, we can see it is down slightly here, about 130%, but that hits or misses. We can see JP Morgan's free cash flow has been on the decline here for a steady amount of years, whereas Eaton Vance over here has had good financials across the board with free cash flow, revenue, and net income, plus has had 38 years of growing and paying out dividends. They're going to do another dividend raise here in October and going in and paying out in November. And when I take a look at JP Morgan, this one only has 8 years of growing their dividend. They do have a low payout ratio, but guess what happened back in 2008? This company cut their dividend by quite a bit. They went from 38 cents per share all the way down to 5 cents per share. So going into this sort of a late term cycle in the market, do I feel more comfortable buying into JP Morgan, or do I feel more comfortable buying into Eaton Vance? Now, I would feel much more comfortable buying into Eaton Vance. This is because this is a dividend aristocrat. It has continued to grow and pay out dividends during the past recessions. It's sitting at 38 years of dividend growth, 43.6% earnings paid out to shareholders. That means there's roughly 60% that they're reinvesting back into the business. We've already taken a look at their financials, their revenue, their free cash flow, their net income, all positive in comparison to what JP Morgan is offering. We can see free cash flow has been on the decline, down $31.58 billion in free cash flow for JP Morgan, whereas Eaton Vance is up $309 million. Now, also, if we just take a look here at free cash flow, or I'm sorry, return on invested capital between JP Morgan and Eaton Vance, we can see that Eaton Vance offers a 16.42% return on invested capital, whereas JP Morgan is offering a 5.6%. And both of these are financials, so we would want to take a look at here the price to book value for both of these companies would normally sit here in the 3 to 4 range or lower. Let's go ahead and get rid of that return on invested capital, and we'll only take a look here at the price to book value of these specific companies. And we can see here that Eaton Vance has, December was a pretty rough month for many companies out there across the market, but this one is at a much better valuation now than it has been for the past 10 years. You can see that price to book sitting there at 4.5, whereas in the past, it would have been really hard to buy into this company with anything lower than this rate. And JP Morgan, one of those main financial institution banking companies, is normally trading at a 1.5 to 1.8. That seems reasonable for them. If we take a look at the price of sales, not really a price of sales driven company, so this doesn't really play too much of a factor there. Forward PE on both of these companies, we can see Eaton down at a 13.10 and JP Morgan at 11.5. And that's primarily all I wanted to cover there as far as these two companies. So I own JP Morgan, but it's not currently at a current valuation. This was actually recommended. Ticker symbol EV was actually recommended from another YouTuber channel. I have a comment here from Money Matters. If you haven't checked out his channel, he recently came out, asked him, what companies are you considering buying? Because he kind of mentioned where he was sitting at this last week, saying that he wants to add into his financials. I think that's a good opportunity right now to begin adding into financials. I have only held JP Morgan for quite a while, and I do believe this is a good opportunity to start buying into a few more financials because I'm not really strong in that specific sector. I do have a few REITs, but financials wise, I'm only holding JP Morgan. So he listed out JP Morgan, Eaton, Vance, Wells Fargo, and BEN. I looked at the four of these. JP Morgan is higher for the valuation, Wells Fargo also higher, and BEN higher. Whereas EV, in its current valuation with its financials, looks much better. We already saw the return on invested capital of this specific company is over that 10% percentage where I like to see it at. So I am going to be buying into ticker symbol EV, which is a brand new position here in the portfolio. I'm going to continue to average down into AVI, and I'm going to continue to average down into Caterpillar, which both these companies are coming up on ex-dividend, with EV coming up on ex-dividend towards the end of the month. So I am going to be jumping back over M1 Finance back. Now, I have three stocks I am going to be buying here on Monday. We've already said EV, AbbVie, and Caterpillar. So I am going to be taking my $115.38 and adding my dividend payout here that I'm going to be receiving from Digital Realty Trust there of $3.99. That means I'm going to go ahead and add $3.99. So I have roughly $120 to divide by three companies. So I'm going to be depositing $40 into each of these companies. So I'm just going to go ahead and jump over to M1 Finance. I'm going to go ahead and select some of my, just sorted by negative. That way I can bring up the companies here that I want to average down on. AbbVie, I'm going to go ahead and select this and set a buy order. I'm going to go ahead and select 45. I want to buy AbbVie primarily over the other ones. So I am going to be targeting AbbVie just slightly higher. And then we're going to jump back into the portfolio. We're going to go ahead and target Caterpillar, which is the second one. We're going to go ahead and buy this specific one. I'm going to go ahead and target $40 into this one and confirm that. And then we have our last company, which is not currently in our portfolio, but I want to add it into the portfolio. So I'm going to go ahead and select Edit, jump into Add, go ahead and look up ticker symbol EV, go ahead and select it, add it to my basket of companies, add it into my portfolio, select all, equalize. Now I've done that, but I am going to be lowering down centrally to a 1%, and I'm going to go ahead and keep Stanley Black & Decker at a 3, and this should give me my 100% there, and I'm going to go ahead and hit save and confirm. I haven't removed any positions out of my portfolio. All I've done is move a new position into the portfolio and kind of equalize it, and then now we should have EV down here towards the bottom, which I will go ahead and select a buy. Now we're specifically targeting this specific company to buy, and I'm going to go ahead and put in $40. I'm going to go ahead and put in 45. I'm not sure if I'll get any other dividends get paid out on Monday, but just in case, we have buy orders for roughly about $190 and $40, $135 is what we have buy orders for. I don't think we're gonna have that many, that much cash to invest, but I always like to overshoot. That way I make sure that 100% of my cash that I have sitting in the account is reinvested every single Monday. So that is primarily all I wanted to cover in today's video. Hopefully it wasn't too much information. I know I like to cover a lot in my Monday videos as far as what stocks I'm going to be buying, why I'm buying them, and I am adding my brand new position there in EV. It's an asset management company, good financials, good valuation. Currently, I know I've been adding a few new positions into the portfolio. That is just because I want more positions. I don't want to be averaging up on my, say, 27 stocks versus lowering my unit cost on just my 6. So that is it for today's video. If you guys have enjoyed this video, hit the thumbs up. If you have not yet subscribed to the channel, hit that subscribe button below. I cover the stock market, dividends, real estate. If you're interested in learning about any specific topic, let me know in the comment section below. I know we have a lot of new investors, and I primarily cover my portfolio, but I do try and make some other educational videos, which I will be, wrap it up here very shortly, and I would like to kind of put together, kind of going back to the basics. I know I've said this back in the past, but it's really hard to create content for learning because there's already so much information out there, and it doesn't a lot of times make sense to just regurgitate information that's out there versus try and create content that shows how one can invest and does invest, not just saying that this is how to invest on paper, but they don't actually visually show you what they are doing with their portfolio. There's a lot of channel creators out there who go over investing, how to become a millionaire with $5 a day, how to do XYZ, but they don't actually do it themselves. It's all just on paper. It's just here on YouTube. Whereas here, I have started a portfolio a year and a half ago. This is my wife's portfolio. It's not my main portfolio, but we're just slowly building up. I started this just, with the channel to show the current valuation, how it could grow over time, and how these sort of portfolios just build with time. So that is it for today's video. If you have any questions, comments, want to drop some information below, I would highly appreciate it if you left me a comment and hit that thumbs up. And thank you all for tuning in. I will see you next time. Have a great day. Bye.